evening, everybody. My name is Julianne Peterson, and I am the host for tonight's Zoom at 8. We are here every Tuesday night. Every Tuesday night, Zoom at 8, we all gather. And you know what? When there are a lot of options, especially on a Tuesday night, I so appreciate you guys putting it on your calendar and committing. We have closed 6 deals within this network. And so what does that mean? I'm looking to help you be the 7th. So again, I'm Julie with Old Capital Lending, and we are a major premier provider of multifamily debt. Now, we can help you with the storage and we can help you with other asset classes, but we really are the superstars when it comes to multifamily financing. We can also help you find sponsors, property managers, insurance brokers, brokers themselves. We've got cost segregation. We can help you. So make sure that if you're looking at any deal, I'd love to be able to help you on the financing. And then since you are here, you can also take advantage of some of our vendors and some of my partners in crime. So the guy tonight he's famous. People come from all areas of the world to see our speaker tonight, David Toupin. If you haven't heard his name, you've probably not been in multifamily for too long. So, you know, this little rock star is got so much zest, and I'm just really excited that he is here to join us tonight. David Toupin is a top millennial real estate investor and entrepreneur. David is a multifamily investor and developer based in Austin, Texas. He started investing at the age of 20. He bought his first property while he was in college, and it was a 12-unit apartment complex. And by the age of 25, David had purchased and developed over $100 million in multifamily real estate and has raised north of $30 million in capital from investors. He is also a CEO of Real Estate Lab. It is a community and software platform for multifamily investors. So David Toupin, how are you tonight?
Oh my goodness. Well, now I've got to figure out how to live up to that great introduction you gave me. So I'm excited.
Oh my goodness. You know, I thought I was kind of a rock star. I got started when I was 22. I'm only 30 now, but 22. And I thought, wow, I'm pretty young. But when I hear things about people that are 20 and 18, we had an investor here. He did a backflip for us. He was only 21. So, I mean, very impressive, David. Thank you so much for taking the time to visit with us tonight. Absolutely. Can you tell us, tell me a little bit about how the heck you got started at 20? I'm sure this didn't happen overnight. This was something that you had in your mind that you wanted to do. So tell us a little bit about that.
Yeah, absolutely. And you can hear me through this mic? Is that working?
Oh yeah, loud and clear.
So I started, hey guys, nice to meet y'all. I see some familiar faces, which is cool. Always nice to see some new faces as well. So I started investing when I was in college, 19 years old. I listened to Bigger Pockets, read Rich Dad, Poor Dad. Been an entrepreneur since I was 13 years old. I started a landscaping company when I was very young, and I always had that itch. So, it seemed like the proper fit for me. I wasn't a rocket scientist. I didn't want to be a doctor, and I wanted to be, an entrepreneur of some sort. And I read Rich Dad, Poor Dad, and I was hooked. Real estate just caught my eye, and it was what I wanted to do. But I didn't want to do just any kind of real estate. I really wanted to do apartments. I think it was the most attractive to me. It made the most sense. It's logical, right? This housing is always needed, especially apartments. And so that's where I wanted to plant myself. And so while finishing up school, I had done a couple internships in like accounting, investment banking, and had a couple job offers. By the end of those, I was so interested in real estate, I turned all my job offers down, went straight into buying apartments. 3 months later, I had my first 2 deals under contract as 2 12 units from 2 separate brokers on the same street. It just so happened. And I ended up going under contract on those without reaching out to a single investor first. I had like $3,000 in my bank account. I mean, I had no money. I couldn't sign on the loan. And, but I focused on what I thought was important at first, which is finding a deal. You can't own real estate unless you find a deal first. So I found the deal, and then, I hustled to find the money. I reached out to anyone and everyone that I thought had money. And, I wrangled together a couple $100,000 for the down payment and found someone to sign on the loan. And that's how I got off to the races. That's how I got my start.
I'm curious, do you have entrepreneurs in your family that, oh, he's leaving.
Sorry. I'm just turning up my mic here. No, I don't really, I do have some like extended relatives, like immediate family. My dad's a dentist.
Okay.
And I didn't really want to be a dentist. So, real estate was a little bit more of my thing. I have an uncle who's a little bit in real estate. But other than that, I was kind of on my own. I didn't really have like financial support from the family or anything like that. All my investors were people I really didn't know until I got into the industry. So started from scratch.
Amazing. So how many kids are in your family? Tell me like the dynamics. Where are you? Are you at the top?
I'm the middle. I'm the
You're in
middle
the middle?
child. 2 sisters, one older, one younger.
Okay. They kind of keep you in check, right?
Oh, yeah, definitely.
So you came up with $300,000 in capital in college.
Mhm.
How does that, where do you go? How does that, tell me how that works? You just call up your friends? I mean, what friends have $100 in college? Seriously. I want to know it.
So I had been going to a lot of like networking events and meetups and stuff like that. So I just kind of kept track of people that I met that I thought had money. And, it's funny, the people that really, I started by writing a list down. I was like, well, who are all the people that I know in my life that have, I think have money? And it was funny because all the people that I would see like driving the nice cars, and you driving the BMW and you got the fancy lifestyle. Those are the people that didn't have $100,000 to scrape together. And what's funny is if you've ever read The Millionaire Next Door, I mean, I truly believe in that because the people who I didn't really think had the money ended up having a lot of cash to their name. And so, it was a grind. I probably had to reach out to 70, 80 people to get 6 people to say yes and invest that $300,000, $350,000. And so it was a lot of no's. It was a lot of learning the wrong way, how not to raise money. Trying to hard sell people on investing in a deal is not the way to do it. Putting all the documents and photos in a Dropbox link and sending it out to people is not the way to do it. You need a professional OM. And so, I just learned by trial and error, like, hey, this worked. This didn't work. I clearly didn't get a response back from this person. Why did that happen? And it was just a constant grind.
So did you tell me a little bit about the structure of that first deal? So you decide you want to buy in where? The first one was in Michigan?
It was in Michigan. Yep.
And that's originally where you're from?
From Michigan. Yep. Outside of Detroit.
Okay. My son dates a gal in Grosse Pointe.
Oh, nice. That's
nice. You know where that is? Okay.
I do. Yeah, my mom.
All right.
Near there. Yeah.
So you find this property, and are you going for agency debt? Are you going for bridge debt? Are you going for bank debt? And how does that whole structure go? Because, by the way, we have a lot of new people here that are like, the vision is there, but the steps that we need to do, we got to get clear on that. So you found the property. Tell us a little bit about how you put that deal together.
Well, it's funny because, this is so cool that you do stuff like this. And there's a lot of people that, are put this information out nowadays. I didn't even know what agency debt was until, probably another 6 months later, until I was under contract on a deal that I ended up getting an agency loan on, a Freddie Mac loan. I didn't even know until I talked to somebody after I was under contract on that deal. So this one, I did them both with a local bank, which I actually still work with today. And they're, small regional Michigan bank, and they lent 70% loan to value type of thing. I mean, it's called Level 1 Bank. So just a local.
Write that down. Level 1 Bank.
Yeah.
Going to, he's famous. Okay. Level 1.
Good
all right. So, but you need a guarantee. You're a kid in college. You have no assets. How do you get that done?
So I pitched one of my investors. I said, hey, I did a very generous structure on this deal. I did an 8% pref and 80% to the LPs, because I just, that's how I had to do it to get it done. I charged I think only like a 2% acquisition fee. And so I was like, hey, I'll give you a piece of my GP split if you sign on the loan with me to one of my investors. And he ended up doing that. So he had probably $1.5 million net worth guy. And, he came in, he had the income to support it and liquidity, where I had absolutely nothing. I was practically broke at the time. I was trying to pay my meal plan still, getting through college. And, and so he came in and signed on the loan.
So that's a 12-unit building. What do you do? What was the plan? What was the business plan at takeover?
So it was a really interesting circumstance, because I tell the story. I say how you tell the difference between a good deal and a bad deal. I had probably the best learning experience, because I bought 2 12 units. They were about a block away from each other, and it could not have been more of an opposite experience with both properties. One was completely positive. One was not the best. We still made money on it, but and the one with the 1 bedrooms that were smaller did almost twice as good as the one with the 2 bedrooms that had a lot larger units. And it was because the one with the larger units had a ton of deferred maintenance, and it was all the problems, the deferred maintenance ate up all the cash flow. So, but the plan going in was to kind of renovate units, go in there. The rents were at like $625. We wanted to bring them up to $750, and we ended up doing that. I self-managed the properties. I remember one month when, my cash flow was low on the bad one, the one that had all the maintenance issues. My cash flow was low. I was in there painting units, saving $500 a unit, so that I could get my investors their preferred return. And so I was really working, I was working for those investors to make sure that I held up my end of the bargain, because I pitched them on the deal, and I was not going to hell or high water. I was going to make it happen. So
what was the plan to hold? How long were you planning to hold? And do you still own that? Tell me like the life cycle of it.
Yeah, I was going to do like a 3 to 5 year hold is what I pitched, but I ended up selling them like 1.5 years later, just because we got a good price for them, and ended up getting like a 17-18 IRR on each of them. So nothing crazy, but it was a good deal. But, the plan going in was to get in, bump the rents on as many units as possible, and then cash flow, and then sell 3 to 5 years. But we kind of cut it short after I realized that self-managing 12 units is not the best use of my time, and was preventing me from going and buying more deals.
Okay, well, that is interesting. That's a great and very powerful statement, because you want to leave this up to the people that do the work, that are professionals, right? I mean, yeah. Okay, so you go to the next one. Now before you bought more, right? Before you sold that, right? So tell me the whole story from buying your first one to where you are today. I'm really excited about it.
Yeah. So I think it was like October, November of 2016, I started looking for deals. I had those 2 12s under contract by January. I closed on them in March of 2017. I had my next deal under contract in April or May. It was a 96 unit deal. So I jumped up by quite a bit. And that was probably the most difficult deal to date that I've ever closed, but it was also one of the best deals I've ever done. And I got that by sending a mailer to an old gentleman, and he owned, I think when I first talked to him, he had told me he owned about 4,000 apartments free and clear on his own. He owned about another $500 million in senior living. So this guy was a billionaire real estate owner, and I caught him. He called me from a letter I sent him from his penthouse down in Miami. But he is a resident of Michigan. He was born and raised in Michigan, and he does a lot of stuff there. And this was the first building apartment building he ever built, like 40 years ago. He started when he was in his 20s. And so I connected with him, and we just got along really well. He's like, pretty much, you remind me of myself when I was your age, type of thing. Yeah. And really, at the end of the day, he threw me a bone. I think he was asking for his 96 units. He's asking like 4.8 million. I ended up buying it for 4.3. He probably could have sold it for 5 right away, But
Wow.
it's funny. I didn't meet him until after I ended up closing. It took me 5 months to close this deal. I extended it. It just took me forever to raise the money. But
Huh.
I sat down with him after the fact and I'm like, I knew he could get more for it. I was like, why'd you sell it to me? He's like, well, I didn't really need the extra couple $100,000. I just kind of, we had a good relationship. I kind of liked you. So for me, that clicked and that changed everything for me in business. Like everything in business is relationship based. It is so important to build good relationships with people. Don't burn bridges, like treat relationships like gold. It's so important because that has been just how I've carried myself since then. It was just a good learning experience coming from that. So that deal is crazy. I house hacked it. I lived in it. I self-managed it. That deal is a story in itself, but
So that one was 2017.
17. Yep.
Okay. And so where is that property today?
So I sold that property a year and a half later. 1.7, it's like 1.75. I got like a 50 IRR on investors' money in a year.
That's 550 IRR.
Yeah,
Oh,
I made
goodness.
them a ton of money. They were investors for life. I turned $1.7 million into almost 3.1 or something like that. It was a big
in a month, in a year and a half.
Year and a half.
So what was your plan there? Was it to go in 3 year, 5 year? What are you finding in your investments that it's really not 3 to 5? It's really 18 months, right?
Most of the 3 to 5s I've done, I've sold so much quicker because just we obviously everyone knows in the past 5 years we've been on just a upward trending market, and so I get an offer or it makes sense, and it's like, hey, we can make the investors a lot of money, and really at the end of the day, no, it's never a bad day to take a profit. One of my mentors always taught me that. And a lot of my investors think the same, like, hey, we don't have to worry about the risk anymore. We're going to make a big chunk of money. Like, let's go put it to work somewhere else. So I've never had anyone that complained about us selling early and making money, which is good. But for me, and as a sponsor and, putting these deals together, that's when we make the most of our money, right? We make an acquisition fee up front, sure. But where we really make, several $100,000 or several $1 million, if you structure the deal right, is on the back end when we sell these projects. So that's where I made my first, $300,000 check is, it took me from broke to actually finally could breathe 2 years later, when I sold this property. So
of course you don't go out and buy a nice car or a plane with that, do you?
I did not know.
So what do you do with the 300? Where do you place that capital? Do you put it in as another asset? What does that look like? Are these all in Michigan?
No. So I bought all over now. I live in Austin, Texas now. I've bought in Dallas, Fort Worth, Houston. I own several properties in Austin, Atlanta.
Wow. How many doors do you have?
I've bought about 1,100 since then.
My goodness. Okay. And now do you use, are you managing them? Are you back to managing them or you still have a third party?
No way, Jose.
Not going to do that again.
Not my favorite thing. No, I'm not a fan of management. I let the professionals do that.
Okay.
Yeah.
And do you watch it every day? Do you spend a couple hours a day? Tell us a little bit about what your time investment is on your assets. 1,100 of them now.
Yeah. Well, I don't own 1,100 currently. I guess, like I said, I've sold a lot. I sold about 500 last year.
Wow.
So my time investment, I look at as a business owner, what is the best use of my time?
Yes.
Because almost anything can be outsourced except for, in my opinion, being the driver and the income producer in the company, right? Like if you are that person, you're the one that's going to be growing the revenue. You're the one that's going to be taking it, hiring people and putting people in the right place, inspiring people to help grow the company. And so that's the role that I like to take on. I see myself as I'm a hunter. I love hunting deals. I love structuring deals. I'm an analytical person. I like running the numbers, or now I have an analyst that runs them and I kind of review them. I have an asset manager that does the asset management because I like getting deals from finding it to closing. And then I don't want to really see it afterwards. I do. I still am involved, obviously, but as little as possible. So
your day-to-day exposure is really letting your other people figure out to run them, but you're off trying to find another property.
Correct. Yep. I'm finding new deals, negotiating, raising money. I love raising money, talking to banks.
I haven't gotten a phone call yet, so I'm waiting for my phone to ring there, David. We'll
Let's
do
do it.
something with you, all right?
Let's do it. Well, I did a deal with your friend John Brixon.
All right, there you go.
Yeah.
Good, good.
Got one Old Capital deal.
So tell me about, well, we like it when you go back to Old Capital, so we'll look for that. But nonetheless, COVID, tell us about how did COVID benefit you? How did it help you? How did it hurt you?
Yeah, I mean, I feel like, everyone's got a different view on COVID, right?
Yeah, I'd love to hear your side of it, because people say, it's been tough, but also others say, I made the most amount of money since COVID.
Last year was the best year of my life, for sure. Without a doubt, hands down. I mean, I didn't watch the news. I put my head down. I was on over 100 flights last year. I did not slow down whatsoever.
Amazing.
I kept traveling to look at deals, to meet with people, business meetings, back and forth to my portfolio. It was nonstop. I didn't stop. I had about 500 units last year, and I wholesaled a 170 unit apartment complex, and I wholesaled a 186 unit apartment complex. Both of which I got good deals on because of COVID, because the world was ending.
Yeah.
And I got a deal in Fort Worth for $57,000 a unit, built in the 80s, which is unheard of. It was 60% occupied.
Crazy.
And it was right by another asset I own there. And we had it under contract for like 9.5, and we flipped the contract to another buyer for 10.4 million.
Cha-ching.
Cha-ching.
Without doing a darn thing.
Without doing a darn thing. And I did the same thing on another deal up in Michigan as a portfolio. So last year was a good year. I started personally buying my own assets. I bought 48 units on my own as well. And, it was productive.
Do you do cost seg, since we've got Mark in the house? Do you do cost seg on all of your assets, or some of them, none of them? What do you do?
I do cost seg on all of them. And now my tax returns look so bad on paper that maybe I shouldn't, but it's worked. I don't pay any taxes for 2020. Fortunately, I've got a lot of losses, which is great. And I guess one tip is I structure all my deals where you get your proportionate share of the losses, not based on the capital put in the deal, but based on your ownership percentage. So if we have a 50-50 split with investors will get 50% of the losses, and myself as a GP, I'll get 50% of the losses, for example. So, it's an aggressive structure, but that's how we do it.
I want to hear your structure. Can you share with us first of all, what you're looking for? Because I've got people here, our audience, with new people that want to find deals and find others that will, hey, what is David, what will he say yes to, and will put me on the deal? So what will you say yes to?
Yeah. So nowadays I've kind of switched my structure up a little bit, I'd say. And I do a lot more joint venture deals. So most of my investors nowadays are writing $250,000 to $1 million checks. I've done the syndications where I've had 30 to 40 investors, $25,000 minimums. It is a lot of work. And I'm not saying, there's nothing wrong with investing $25,000, but I personally want to do more like joint venture type structures. So that's kind of what I'm doing more nowadays. I'm putting more of my own capital in the deals. I'm opportunistic. I will buy a 20 unit just as quick as I'll buy a 150 unit deal, because I have bought 20 unit deals that have made me 4 times as much personally as 136 unit deals have. Because
that is amazing, David.
Yeah.
Most people wouldn't be able to say that. So before you go further,
tell
me a little bit about how is that? Because most people would say can't do it. It doesn't make sense.
Well, syndication is all like the rah-rah, great, cool thing to do nowadays. And I'm totally like, I've syndicated, but I'm like anti that type of talk, because I'm pro balance sheet. Like, I don't care how many doors you got. Like,
Yeah.
what does your balance sheet look like? How much net worth are you adding? If you're going out and you're buying syndicating deals with 9 general partners and everyone gets 1.5% ownership in the deal, I mean, let's talk about the elephant in the room. You're not making any money. And so what really matters, I mean, if you're doing it for the experience on your first deal, that is fantastic. It's awesome. Love it. I mean, I don't want to bash it, but if you're being very serious about creating wealth personally, that is not going to get you there. So you have to be really aggressive and take on multiple roles and be willing to, kind of go in and lead the deal. And the fewer the partners, the better. And so that's kind of how I've structured almost all my deals. Is it's never been more than 2 GPs on it. So, that's my personal advice to people. But I guess the example you asked about the 20 unit deal is, I kind of ended up stealing this deal during COVID. It's in a city called Royal Oak, Michigan, about 20 minutes from Grosse Pointe.
Oh, there you go.
And it's a really hot little town. It's 3 blocks from downtown. Is a part of a 230 unit portfolio we bought. And I just negotiated a really good price on this one specifically and just bought it myself. And I had 4 investors put up $650,000. And I put $0 into this deal. I did a straight 50-50 split with the investors, no preferred return. So from the get-go, I own 50% of the deal with no money into it. Those investors all have a flat 20% return in the deal. And so I'm going to refi the deal by the end of this year. I'll pull about 2.2 million out of it. I'll pay all the investors back their money plus a 20% return, which is a good return. But then I'll own it outright after that. And there'll be about $1.2 million in equity in the project. And so I say that because I own on the other side of things, I own 136 unit in Fort Worth right now that I'm selling. And after 2 years of a lot of hard work doing the syndication thing, and I've got 30 investors on the deal, and there's a ton of work that goes into it, right? After my split with my co-GP on that deal, my equity in that is like $150,000, which is it's still a good amount of money, right? I'm not going to say it's not a good amount of money, but it's when you can do so much more on a smaller deal by structuring it right. I just like to be transparent with people because there's a lot of fluff in the industry. So you don't have to go for 100+ unit deals to create wealth. It's a farce. And so I like telling people that.
That is really inspiring. I do like to hear that. What about this trend of funds? Are you jumping on board with it?
I don't have any issue with it. I know some friends that actually I have a buddy in Indianapolis that has a really cool fund actually. And I think they do great. It just depends, like, how do you want to structure it? Are you going to be sitting on the money? Or are you going to raise it as you find the deals? Or, I think having a fund of readily available capital is an awesome concept. I mean, if you can go raise that money and now you've got cash that's just ready to be deployed and you've got a good pipeline of deals and you have a strong 5 to 10 year plan of like buying these, holding these, working with the same investors, like I think it is really cool. Yeah.
I agree. Yeah. Okay. Not done. Not yet. Okay. I want to spend some time on the real estate lab because now you have this. Yeah. Look at that. Yeah, I got some swag. I see the swag. Tell me a little bit about that because really when it comes down to the sizing, this is a sizing model, correct?
So it started off as like a spreadsheet, right? There's a lot of spreadsheets people use to analyze deals. And I had been creating it for years, just using it myself. And then people started asking me like, hey, can I use it? Can I buy it from you? So I threw it up on my website and I sold a ton of it, just hundreds and hundreds of them. And I figured that there's a better way. There's an easier way. There has to be a way to manage my acquisitions better, analyze deals faster, and software is the key, and no one's done it yet. And so over the past couple of years, 2 years ago when I came up with the idea, I hired a software company. I think I spent $60,000 that I just pretty much flushed down the toilet because they were a terrible software developer. Learning experience. Went back to the drawing board. And I hired a really good team out of San Diego. They've been building it now for about 8 or 9 months. I'm launching it next month in June in about 3 weeks. And it's a full suite acquisitions platform where you can manage all your deals, on like a nice little map, like, a CoStar or something like that. You've got a pin for all your properties, you've looked at or are looking at. You can upload a rent roll in T12. It will read those. It will pull the key data out. It will put it in the model automatically, which is online based model. So you don't have to save all your Excel files, or it'll organize all the documents. You can auto create LOIs. There's an LOI creator in it online, generate reports. Eventually, my goal with it within about a year and a half is you upload a 70 unit deal in Fort Worth that's built in the 1980s, and you upload the rent roll in T12, and you basically click a couple buttons, and we say, hey, based on it being this size of property in 1970s in this part of town, we suggest you use this set of operating expenses. And then you click another button and it pushes it out to a bunch of lenders who can then quote it, bring the quote right back to you, plug it into the analyzer. You can transact loans through the program as well. We should talk about that, Julie.
I think so. Yeah. We're more about relationships as opposed to, just throwing it out, but nonetheless,
Sure. But it's an acquisitions platform.
Oh my goodness. So tell us, how much does it cost? Tell us a little bit about that. What can we expect?
Yeah, it'll be between 100 to 200 a month. I think it'll probably start at $100 a month. Okay. And then, I'm trying to provide like eventually CoStar type data for a fraction of the cost, and specifically multifamily. I'm not going into commercial and all that other stuff yet, but that's the goal.
That's probably a big passion of yours, right? I mean, the whole apartment thing is great and wonderful, and it brings some exciting money, but that's probably your passion, right? I mean, that's what I'm thinking.
Truly is. Yeah. I love it. I'm I'm a nerd. So for me, it's really cool bringing the software program together. It's something I've never done. It's new, it's exciting. And I think people are going to really like it.
Wow. It's so terrific. I'm so glad to hear that. Can you share with us one mistake that you wish you could kind of just go back in time? What would that look like?
Oh man.
I didn't prepare you for that, but I'm just.
That's okay.
Yeah.
I've made a lot of them. But I would say the biggest thing is I did not raise capital the right way when I first started. I literally information overloaded investors, and I just threw all the information into like a Dropbox link, and I was sending this link out to people expecting them to pull up the Excel analysis and look at the photos. And it's like, it's not a clean presentation. It's not easy to digest the information. And I think I sent it out to like 75 different people I'd prospected, and I lost every single one of them. And so then I figured out, I'm like, wow, I need like a nice clean package to send these people in a PDF that's super easy to understand. And then no wonder my numbers started going up. So that was one of my, that almost lost me that first big deal because I had to extend the deal twice. Other mistakes. I mean,
have you lost money? Have you lost money EMD? With extensions and all of that?
Yes. Last year, I lost $200,000, not on an earnest money, but on a handshake deal with a broker not to be named in the Dallas Fort Worth market.
Well, we won't talk about him.
No, we won't talk about that. No, at the end of the day, there was a fee that was supposed to be given us in a deal, and things got a little bit dicey, and it was never put on title, and it was never paid to us. So we lost out on a $200,000 fee that we're supposed to get as like a brokerage commission. But always ink it. I'm a handshake guy. I shake your hand. It's as good as done. Seriously, on my goal. That's how I operate.
Yeah.
But
some of these things, you kind of lose faith in people when they don't come through. They don't behave in the same way. I got you.
Always ink it. Get it on paper. Get it in writing.
Terrible.
It's okay.
So I know that we probably have some questions in the audience here. Who is your mentor? Who lights up your day to say that is the guy that drives me to my success?
Honestly, probably me in 10 years. I'm trying to be the best version of myself. And I have a lot of mentors. And I've learned from just a ton of great, amazing people, but I'm always looking like, how do I become the best version of myself going forward? Like not just business, but like health, family relationships, like all that stuff. And I'm stealing that line from Matthew McConaughey. I did not come up with that. He said it first. But I've had, I have a business partner of mine, Glenn Gonzalez.
Oh yeah.
Right. He's been a fantastic, wonderful mentor of mine. We've partnered on several deals and I'm sure we'll continue doing more. So much experience, great guy, and has taught me to not only be a good investor, but a good human being. And he's a great example of that. Let's see. I've got a couple. That guy I bought that first big deal from was a great initial mentor of mine.
Yeah.
My parents, good role models.
Nice.
Yeah.
So where are we going to see you in 10 years?
I don't know.
You're going to be on an island? You're going to be flying more planes? What's the story there?
I'll definitely be flying planes. Yeah. I'm close to getting my pilot's license and I'm going to get a plane this year. I'm working on building a hangar actually at the moment. So I'm building an airplane hangar. Because there's no space to keep a plane. So if you get one, you don't have anywhere to put it right now. There's a shortage. So you need the hangar first. But yeah, I don't know. I want to keep inspiring people. My hope is that the software company really takes off and changes the industry. I'd like to be able to say that I helped innovate in an industry that I'm really passionate about, and bring some cool like modern tech changes to it to help it grow. It's really a good old boys type of industry still, right at the top, at the high level of it. So I'd like to bring in a lot of younger people and a lot of new people that maybe thought it was never possible, no matter what age you are, but like, you don't need to be born with money. You don't need to have family money. You don't need to have all the answers up front. And you don't need to be a rocket scientist. It really is something that you could just really self-educate on. I like what Jim said. You don't need to pay $30,000 for a coach. Yeah. Right. You don't need to do that.
Yeah. He's got that for sure.
There's a lot of free information out there.
Yeah.
And the best learning is you learn by doing at the end of the day.
True. All right, David Toupin, how does somebody get a hold of you? If they got a question, they want to feel inspired, how do they get a hold of you?
Yeah, you can email me. I'll throw my email here in the comments, david@realestatelab.com. If you have Instagram, that's a good way to get in touch with me at Real Estate Jedi. LinkedIn, David Toupin, Facebook, David Toupin. Yeah, always looking to connect with new people. So
that's fantastic. Well, if there's no other questions, it is time. David Toupin, first of all, thank you so much. It's been great to kind of be in the same room as per se. Probably didn't think that we'd be doing this, a year after. We've been doing this for 2 years, actually. So great to finally get you on board and to visit with you and to watch you continue to be successful. And just pleasure. Congratulations for all your success. So, yeah.